Welcome back, everybody, to the Expert Trader podcast series hosted by Chart Addicts. We have some very special guests in the house today. The guys from Predicting Alpha are here. Sean, Jordan, can you guys introduce yourselves to the guys at home?
Roy, how's it going, man? My name's Sean. I'm one of the co-founders of Predicting Alpha. And this is Jordan over here.
Roy? How's it going? For the traders at home that have never heard of Predicting Alpha, can you guys give a little bit of a rundown about who you guys are, how you got started, and what it really is?
Yeah, for sure. I think there's a couple different things we could talk about there. We could talk about who we are, because one of the things about us is we've been trading for a while. Predicting Alpha is a relatively new thing that we've brought around starting January 2020. If I were to sum up what Predicting Alpha is, it's simply the Bloomberg for the retail trader, right? So our number one thing is we provide high quality data in a user-friendly, affordable format.
Okay.
We also provide a bunch of education to go with that, specifically focused on the option space, because as you'll come to find out in this interview, we come from a volatility trading background, and options are a great product for that. But in terms of what Predicting Alpha really is, it's just creating accessibility for the average person to actually start trading using data to their advantage, right? Start addressing why do big firms use Bloomberg, things like that. We try to make that apparent and accessible to everyone.
So I kind of have a two-part question based on what you just said. Give us a little bit of a backstory on how Predicting Alpha got started. Like, why would you guys start something that, that this sounds like a lot of work to start a company like this to provide data. So why did you guys start a company like this? And why is data so important to the retail trader?
Yeah, Roy. So, I think we have to go back quite a bit there to really understand how Predicting Alpha came about. So Sean and I have been trading for a while, and when we first started out, we were really focused on technical analysis and reading all these books that are really try to help you master your psychology and be able to find the patterns in the markets, right? And it was a tough road for us doing that. And this is not for everyone, but at least for us, like we found it really difficult to try to make it in the space. And I'm sure as the interview goes on, we will get more into that. But we started picking up some coding and skills to try to find out real patterns, real inefficiencies in the market. So once we started getting involved in data and seeing the power of things like Bloomberg, right? I actually got access through school to a Bloomberg terminal. I was able to see the power of data. And so once we got involved in that, we said, okay, well, how can we give back to the people, right? Like it's $30,000 to own a Bloomberg terminal, right? And starting for an annual subscription, right? Like it was hard for, someone who's starting out to get access to this, right? Only the top guys in the firms are able to get access to a Bloomberg terminal. And so from there, we said, well, how can we provide this to the retail trader who are actually really starved of this information?
Right. To add on to that a bit, you got to remember, it's not there right now, right? So let's say when I was even 18, I was, I wasn't necessarily doing poorly in the market, but I don't know how much of it I would have had to chop up to luck.
Yeah.
You know what I mean? At the end of the day, I didn't really know if what I was doing was, if my methodology was really creating my outcomes.
Yep.
Or if it was sort of like I was just, hitting black 5 times in a row at a roulette table and calling it skill. You know what I mean? And the tough part for me was, I always remember this. I always remember being, 18 years old and the first website I found that I actually started looking at people trading and conversations around trading was Stockhouse.
Okay.
I don't know if you've heard of it. It's sort of like Stock Twins. It's just a message board for people trading stocks.
And what was it?
Go on there and I would see, a couple different kinds of comments. I'd see some people being like, this thing's going to 0 or this thing's going to 1 million. And I'd be like, oh, these guys don't know what they're talking about. But then I would come across these people who would share these super lengthy analysis where they would draw their different supports, resistance. They would share all of the different indicators that they were looking at and what they were interpreting them to mean. And I remember thinking to myself, like, this is exactly who I want to be like, right? And I remember then going and looking up like how to become a better trader. And everything I found was directly correlated with what these people were doing. And I was like, holy, I have found the golden ticket here, right? And that became everything I studied for a long time.
Now, what would you say they were studying? If you can just give a ballpark of what they were doing versus what you were doing, how would you describe what they were doing? What is that holy grail thing that you stumbled upon? Is that data? Is it data-driven decision-making or?
Yeah, no, I know what you mean. So it's what I thought was the holy grail at the time.
Okay,
Right?
okay.
I was new to the game, and it was like I saw these guys doing this stuff online. I had no idea what they were actually making at the end of the day. Right? These are just
Okay.
names online.
Right, right, right.
And then I found all this education that sort of correlated with what I was seeing on these forums, and that became what I started dedicating my time to, because I was like, these are what people are. When you talk to a trader about what's going wrong with their trading, 9 times out of 10 you're going to hear, I got greedy, or I missed some pattern that I can see now. And then I went online and I found how to improve, how to read the charts, how to, how to control your psychology.
Right.
These are the types of things I was finding online. And that became what I studied for a long time. But, as I'm sure Jordan can share as well, it's sort of all that happened was I'd buy these things, I'd buy these books, I'd buy these courses, I'd get extremely motivated, but I'd end up back in the same spot. I'd end up losing again. And I literally just, I was beating myself up pretty bad, because there was no, when in the lens I was looking at it from, the only thing left to question was myself, because I'd never actually taken a step back and said, wait, is the strategy I'm using, the problem is myself if the strategy I'm using is good.
Yep.
But I'd never stopped to ask myself if the strategy and methodology I was implementing was actually going to get me there.
Exactly.
And it was when I asked that I realized I actually don't want to be like those guys I'm seeing online, because they're not the ones that, I don't know who these guys are. I can't validate anything they're saying.
What would you say was the turning point for you to go from thinking that was the holy grail to actually understanding that there's a level beyond whatever you were seeing online that actually took to be successful? What was that turning point?
About Portugal, and then
So actually, I got a pretty funny story. Like, I was actually an electrician at the time. I was so right out of university, right out of high school. I started being an electrician, and I remember I was like, I don't want to do this for the rest of my life. Like, this is pretty tough. So I was like, okay, well, maybe if I and I started really getting deep into trading actually at that point. I took the it's basically like the Canadian CMT. It's called the Technical Analysis by the Canadian Securities Institute.
Okay.
So I took that. I was like, I'm going to take all these exams, all these courses, like to try to get to become a professional trader. Did like the CSC, I did a couple other exams, and I was like, you know what? If I just go and if I just go and isolate myself for, let's say, 3 months and just study technical analysis, study trading, then everything is going to be good. Right. So I remember I said, I left my job as I was making good money as an electrician. I left my job and I went off to Portugal for 3 months, and I was like, I'm going to stay here and lock myself up in this room on the beach and just do technical analysis and really like learn these charts. I was like, there's no way I'm coming back from this without making money. Right. If I really immerse myself in this, there's no way I'm not going to be a profitable trader. Right.
You guys' story is a little bit different than most. What I would say traders on Instagram. You actually came from an institutional trading background with institutional training on technical analysis. Then you stepped away from that and then took time to actually learn things yourself and to apply what you knew.
So we weren't on the institutional side. This is just like, you can go and write these exams. Like, for example, you can go and write the CFA. You can go and write your CMT, right? You can go and write these exams. So
Okay.
I was actually an electrician at the time. I said, okay, you know what? I'm going to go and try to get into the industry. So I started to take all these exams.
Okay, I see you.
Right, and that's when I really started learning like about technical analysis and really trying to find an edge through the charts, right?
Okay.
And like I'm sure as well, like you see those patterns, right? So once you see those patterns, you're like, I can actually do this.
Right.
Like let me ask you a question, Roy. Like, remember the first time you saw, like, let's say like an ascending triangle, right? And you saw it break out. You're probably like, holy smokes. Or like when you first saw a head and shoulders pattern on the chart, you're probably like, this is unreal, right? Like, I'm seeing something that no one else can see.
For sure. And I think that's one of the things that what I would say is conducive to long-term success is if you actually start to take pride in being successful on the charts, just being able to see patterns and to identify market structure. I feel like if you can take pride in that and you can be happy in that, you're going to be in this game for the long term. Now, you said something that's very interesting I want to circle back to. You mentioned an edge. Could you explain to the people at home what an edge is?
Yeah. The first thing actually about edges, it's a word that's really misused. If we're running a 100-meter dash and there's one person who's on steroids, he has an edge.
Yep.
Right. If we're in the high frequency trading field and someone has a direct access to the market, right?
They have a direct line into the market.
Right. They're going to have an edge.
So it's like a competitive advantage?
It's a competitive advantage, right? In the market, at the end of the day, we are always playing against other players, right? It's not really, mastering yourself. Like, Aaron Brown, one of my favorite quants, he always says, like, first level thinking is thinking about the cards you have. So if we're at a poker table, right, thinking about the cards that I have.
Yep.
Level 2 thinking is thinking about the cards my opponent has. And then level 3 thinking is thinking about what my opponent thinks I have. Right. And that's how a lot of traders are stuck in this level 1 thinking. It's like, it's my psychology. It's all on me. Right. When in reality, you are going against the market. Right. And you should be thinking in terms of, well, what's everyone else thinking?
Right.
What's everyone else doing? And how can I take advantage of that?
Okay. So let's circle all the way back, guys. We got a little off track. Explain to the people at home why you guys landed on options and why you guys focused on making options an integral part of what you guys do.
Yeah, definitely. So at the start, the question we have to ask, like, we obviously, we think options are a great product now, but when it started, it wasn't necessarily just let's trade options. Options are cool. I like the leverage. People start usually getting into options from that perspective. And to be honest, it was part of what attracted us. But the real reason that we picked options is it's a product where we found an edge. It's a product where we found a way that we can actually make money. The question that we always start with is, where's the money? You know what I mean? Like Jordan has a story about one of his friends who actually moved to Hong Kong to trade the exchange there because that's where the money was. And I think as traders, we need to be versatile like that, where if there's a product that comes out or a new product where we find the new advantage, we should be moving there, right? Our job is to take advantage of inefficiencies. And if we happen to find it in the option space. If it had happened to be in the Forex space or in the stock space, that's where we'd be right now.
Okay. That's understood. So that doesn't necessarily mean that you guys are advocating that options are the best thing to trade or that options are, the most profitable vehicle. This is just where you guys seem to have found an edge. And because that competitive advantage, makes you more profitable.
And that goes for many things. Like, we don't think there's a best time frame that be trading on. We don't think there's a best product to be trading. We don't think there's like a particular view that you should always express in the market. We literally think that where the money is where you should be. Okay. Right? The first question is, where's the money?
Awesome. Now, guys, your website, on some part of their website, it says, and I highly encourage everybody who's watching this to go check out the Predicting Alpha website. But your website says that trading is a competition. It's not a test. Can you guys elaborate on what that means?
Yeah, good question. This is actually such an important concept. And this is something that, we learned, luckily enough, from some portfolio managers early on. But it's basically, people think if I get good, right? If I learn these patterns, if I learn these, how to master myself, I'll be able to go out and make money. But the reality is that you're playing against someone else. So if the competition is good, then you have to be better, right? It's not like I can get an A on a test and I'm going to make money. It's like, if everyone else is getting an A, I got to get an A+. Right? And that's one thing people totally, they totally forget about. And it really drives them, it drives them in circles, right? You really need to step back and be like, I'm in a market here, right? I'm playing against other people and I need to be better than them. And then you can start thinking in terms of, well, who do I want to be playing against? Well, do I really want to be playing against the institutional traders in the most liquid products? Or do I want to go where all these retail traders are who don't know how to price an asset and they're clustering around these certain, let's say, fields, right? In the options market, we know a lot of retail traders love, and not just retail traders, but also institutional traders. They use options for directional bets, right? So they think Apple's going to go up, they're going to buy a call option, right? But what they forget about is that option is priced based on how much Apple is going to move. So
in a given time frame.
Right. So now we're introducing a second component. It's not just, is Apple going to go up? It's Apple's going to go up in a certain amount of time. We introduce a volatility component.
Okay.
Right. And so for that reason, we can say, well, we can find areas where people are mispricing volatility.
All right. Okay. This is all really extremely interesting to me, but I'm going to try to keep it ground level for the folks at home so we can keep it streamlined. Yeah. Can you guys just start off by explaining what quantitative strategies are and how do you guys employ quantitative strategies in what you guys do?
Perfect. So the number one thing, I guess, is to say what quantitative trading is not.
Okay.
All right. Because I think it's actually a term, a lot of people, when they hear it, they kind of go, whoa, not for me. You know what I mean? Not for me. But for example, quantitative trading is not the algos. It's not AI. It's not necessarily machine learning. All quantitative trading is putting numbers to your ideas, right? Making data-driven decisions rather than faith-based decisions, right? So it's not, I think this, so let's go do it. It's, I can validate this in some way, right? Can I put numbers to this? Like, does this water hold weight? Or does this idea hold weight in any way?
Now, what would you say if someone at home is asking themselves, does this apply outside of options? Does it apply to other financial instruments? What would you tell them?
100%. So I'm going to give you a super quick example of what quantitative trading is. It's basically like objective trading. So for example, someone sitting at home will say, okay, well, I'm going to look back in time and see when, let's say, the RSI goes above 70 and I don't know, there's high volume, let's say, super simple pattern. And I'm going to go and try to see, okay, well, where does this work, right? And that's very subjective. So what a quant would do is they would say, okay, here is our idea. Let's go and put it into the computer and run it with no subjectivity and see how well we have done, right? And if it does good, well, then maybe we can trade it, right? Or they'll come in and say, okay, well, instead of just looking at the screen, maybe I can, pull data and let the computer help me find these patterns that I might not be able to see.
Now, does somebody need to be an information systems expert, or does somebody need to be a coder or something to understand how these strategies work or to actually be able to use them?
So it's 100% no. The strategies are actually, they're just like, let's say a regular, like, I don't know what strategies you run, but it'd be exactly like one of your strategies, but just quantified, right? So instead of saying, like defining what a breakout is, like let's say if you're trading breakouts, instead of like just looking at it, we try to define it. What is it, right? Can I write it down on a piece of paper?
So something like, if it breaks 20% of the last high and then breaks above the last 3 daily closures, then it's considered something?
Then it's considered a buy signal. Yeah, then it's a buy signal. And then, so then we say, okay, well, here it is. Now let's look at all the data and let's see, has this worked? And can we tweak it, right? And that's really what it is.
Now, if somebody uses the PredictingAlpha terminal, what do they actually get with their terminal?
Awesome question. So this is the thing, right? So it's what you get is user-friendly data is the best way to put it. So instead of just, downloading an entire spreadsheet of numbers and then having to run your own, simulations on it and visualize it yourself, what we do is the PredictingAlpha terminal compiles a whole bunch of information from around the world and from tons of different sources, and then compiles it into visualized graphs for you. So you can actually make sense of it. And this is why we say you don't need to know how to code to learn how to work with a model.
Okay.
Right? You just need to, we put it in a spot where you just need to learn how to interpret the outputs of the model now rather than build it yourself. And this is why Bloomberg is so popular in the professional space, because a lot of what Bloomberg does, they have an API so you can do your own stuff to it, but they also provide you with tons of visualized versions of mass amounts of data, allowing you to basically, like, so for example, a simple example would be like a regression, right? So if you looked at a regression, right? If you took 1 million data points and threw it onto a graph, right? With an X and a Y axis, and you were like, here's all these different points where something exists, right? If you looked at it with your eyes, most of the time, you're not gonna be able to see anything. It's just gonna look like noise. It's just gonna be a whole bunch of dots all over the place.
Right.
But that doesn't mean there's not a relationship there. There might still be a relationship between all this data you're seeing that our eyes can't pick up. And this is where coding would come into play. It would allow you to find those relationships. Something like the Bloomberg terminal or the PredictingAlpha terminal does that math for you. And now your job is to interpret that relationship and then use product knowledge and your own creativity to come up with a strategy or trade idea based off of this new information you're seeing.
Okay. So would you say this is sort of like an equalizer between this information asymmetry that exists between institutions and retailers?
100%.
Okay. Awesome. So let's go back to one of the first questions that I asked, because I feel like I want to get a more clear answer. Why would you guys choose to embark on something that sounds, to me, it sounds extremely tedious. It sounds extremely difficult. It sounds extremely data intensive. Yeah. Why would you guys choose to go down this route?
This is we can both answer this one. For me, honestly, it's because like I was that person, right? So my coding skills are nowhere near as high as Jordan's coding skills. Thank God in our partnership here, I've got a guy like him. I call it my quant, but when something feels so far out of reach, people go looking for alternatives that can hopefully get them to the same ends, even if the best method, we know what it is, but it's so far out of reach that it's like not possible. And I know how that feels. And I was lucky enough to have some people in my life who sort of pointed me in the right direction. Lucky enough to have, our this business relationship with Jordan where we can work on this stuff together. But I know exactly how it feels. And I have so many friends and family that are stuck, honestly, in what I call a trader's rat race.
Yeah.
Right. Where they make some money. They think things are good. They lose some money. They think they got greedy. They go back. They go, oh, here's where things could have been differently. They think that they've gotten better. But in the end of the day, it's very hard to tell if they have or not. And it only shows itself over the long, long term. Because just like a roulette table, right? You can sit down on any given hand and make money, right? I put $5 on black. There's a 48% chance that I'm going to make $5 right there. And it's hard to tell in the short run if I can make money, if I can build a career here, if I can build a life off of this. And a lot of people think they want to, and we built this because this is what it takes. We wanted to give someone a fair shot at winning.
What I'm starting to understand here, or what I'm starting to kind of think about here is, you guys tell me if I'm wrong or not, or you guys tell me if I'm headed in the right direction. I feel like if you're not using some sort of quantitative strategy, you're really guessing in terms of your results. Now, ultimately, making withdrawals out of the account or seeing positive growth in the account is, I guess, a scoreboard. But are some people keeping a mental scoreboard of their progress and not really putting a number and quantifying their progress?
100%.
Is that the issue that you guys are trying to solve?
100%. I think that's definitely one thing for sure we are trying to get across is you really got to, you really have to track your progress. And anyone can go to the blackjack table and come out a winner, right? If you have 1,000 people playing at the blackjack table, well, there's going to be a couple people that make a lot of money, right? And that's just because the edge is small for the casino, right? It's only a 2% edge. So you're going to have a lot of people make a ton of money and a lot of people lose a lot of money. And a majority of people sit right in the middle, right? Just losing, that 2% edge. And in trading, it's the same way, right? You're going to have some people, think about it, right? We have like 1 million traders trading the market every day. And let's say the market is usually fair. So you have a really small, let's say you have a really small edge. Right? There are going to be people who make a shit ton of money, right? Even though a majority of that came from luck, right? And it kind of like gets us as traders saying, oh, I'm doing really, really well. When down the road, you're just going to revert back to the mean, right? It's like that hot hand theory where the guy's shooting basketball and he hits like 10 in a row, but eventually he's going to drop back down to his long-term mean, which is maybe, let's say, 7 for every 10 baskets.
How would you guys, and I don't mean to cut you off, but I just have a quick question. How would somebody be able to tell if their success is due to luck or if the success is due to the successful deployment of an effective strategy?
Yeah, and that's actually a really hard question. And one way to really look at it is through back testing, right? Let's say you have a strategy, and if I back tested this, well, I can see now what to expect, right? I can see what my drawdowns were. I can see what my hot streaks were, right? I can really see what was going on. And here's something that actually a lot of traders struggle with is sometimes they do find an edge, right? But right now they're just on a losing streak. And because they don't have any evidence or real quantified, data on this, they close down their strategy, right? Every good strategy goes through a drawdown. So imagine you have this edge, right? Like think about it like this. You are the casino and you have a small edge, let's say 3%. You want to play this game forever, right? But what if you go through a small drawdown, which does happen? A lot of traders will actually close down their strategy when if they just stuck with it, they would have eventually came back up.
Yeah, I was gonna say one more thing you could do. So let's say you can't backtest your strategy, right? You don't have the coding skills to do it or someone to help you do it. There's a couple of questions you can ask yourself that can make you really understand if you're on the right track. The most basic one is, if you can answer this question, you're on the right track. Who is paying me and why? If you can answer that question about your strategy, then you're probably onto something. If you can, and when I say answer, it means like, like it has to make sense, right? So, front running the banks, doesn't hold water. It's not a strong enough answer. For things like, why do, we can do it for this one. Why does holding equities make 9% a year? Well, it's because you're collecting a risk premium. You're holding risk that someone else wasn't willing to hold. And you're getting paid for holding that risk, right? We thoroughly, this is, it's not our idea. This is just a well-known concept that this equity risk premium exists for holding equity. And that's why on average, you're going to see a 9% return.
So it's not due to price appreciation of the market?
It's actually the embedded risk premium. And you can actually get, let's say, alpha by, let's say, buying companies that are going to be outperforming, right? But
sorry, real quick, can you guys break down what alpha is?
Yeah, it's
the folks.
It's your return above the market, right? So let's say, for example, the market is, let's say, making 10% a year, and you can generate, let's say, 15% a year, right? You're gonna have 5% of alpha.
Your question is just like, how can you generate alpha, more or less? How do you go about doing it?
Yep. So first thing is there's not infinite alpha in the market. So remember, if we circle back to, let's say, the competition, if I'm generating alpha, someone is losing, right? If I'm making money, someone is losing. So the way we have to generate it is we have to see, okay, well, where is the market losing money, or where are people willing to give up money? And that's where we want to be. So here's a quick example. In options, right? Everyone buys stock, right? Everyone is long stock, right? Pension fund, mutual fund, the whole world is long stock. So for that reason, people have to go out, and banks and institutions, they have to go out and buy out of the money puts, right? To hedge their whole exposure. Okay. And so they're going to be willing to pay more for that. So you could come in here as a trader and provide that liquidity to these banks, to the world really, in these out of the money puts, and generate above and beyond returns.
Okay. Now, I'm not an options expert. I do follow along, but for some of you guys that are having a hard time understanding this, you guys can go brush up on your options trading and then come back and watch this video. And then the call and put options will make a little bit more sense.
Yeah, definitely. And for basic stuff like that, there's excellent resources. But if anyone has any questions, we love chatting about this stuff. They can just hit us up.
Guys, reach out to Sean and Jordan. They'll help you guys out with all of your options needs. Now,
not about calls and puts. Go watch a YouTube video for that. But anything more, all right?
All right, I like it. So I think you guys mentioned something very important, which we're a retail coaching service. And so we deal with traders that have party hopped strategies for years. And what we've seen is exactly what you guys have described, is that as soon as people hit some sort of losing streak on their strategy, they start to party hop to the next one because they think that strategy is not effective. That if there's one reason that you guys go in and apply these quantitative strategies to figure out how effective your current strategy is, it's to make sure that you guys are actually winning the way that you say that you're winning, and to make sure that your strategy is soundproof, because that's where confidence comes from.
Yeah. And something I'll add on to what you just shared, because it's a huge point. Methodology over outcome.
Can you elaborate?
Okay. Yeah. So not every winning trade is going to be a good trade, and not every losing trade is a bad trade. It's all about, do you understand what's going on? Are you actually in control of this? And does it have what we call long-term positive expected value? Meaning that if you repeat what you are doing over and over again into the future, do you actually come out ahead? All right. You cannot tell that by looking at one trade.
I think that's incredible. A lot of you guys might not understand what that means, because you're still predicating your success based on the amount of money that they're making at home, right? So they kind of say, okay, if I made money today, I consider this a good trading day. But what you guys are saying is, if you effectively deploy your strategy, then you have then you can actually expect how much money you're going to make in the future. You can actually predict that in some way.
That's a huge part of it. So it's a funny thing. One of my mentors said to me, you could give the greatest strategy in the world to the average person and they would still screw it up. And that's where the fact that most people will not know how to deploy a good strategy comes into play. But coupled with that comes, you need to have a good strategy. First and foremost, the strategy actually has to be solid, right? So I feel like a lot of people, myself included, right? This comes back to what I was talking about like earlier on, where I was really beating myself up a lot focusing on my psychology, but I never stopped to actually look at my strategy and be like, is what I'm doing going to make me money? Do I have an edge?
Right.
Is there something about what I'm doing that is different than that's going to make me money? And when I stopped and asked myself that question, I started to look at like, okay, well, how would things change if maybe I had different skills, or if I had worked in a hedge fund, would how I think change, right? Like all these sort of questions came up, and that's where I sort of went, you know what, my strategy needs a lot of work before I read Trading the Zone for the 15th time.
All right, I think that's great, guys. Let's get a little personal. Can you guys tell me individually who you guys look up to in terms of trading or in terms of investing?
Yeah. For me, I would say it's got to be Aaron Brown. He's probably one of my favorite traders of all times. I do have some like friends that are portfolio managers that I really look up to, but you know, you can't find them on the internet, so it wouldn't make sense for me to say their names. But Aaron Brown is a fantastic resource. Ewan Sinclair is also an extremely good resource. These guys have made it to the highest levels in trading, and you know, you can really learn a lot from these guys.
Yeah,
incredible.
For me, probably Ewan Sinclair is my number one. But there's some guys out there who like really got me thinking a little differently in the early days, like Joel Greenblatt. He wrote a book called The Little Book That Beats the Market. He actually had written it for his son. He basically tried to make understanding investing like as simple as possible. It's like a 100-page book, but it was, you know, one of the first like books that like really started to click for me, that I was like, okay, there's like a systematic way where you can actually like find something, right? There's ways to make money here that are not like that are not like just on my ability to see something subjectively over long periods of time. Like there's actually ways to like systematically make money in the market. And that sort of got me, you know, one of the books that got me thinking on a whole new path. So shout out to Joel. But for the option space in particular, it would have to be Ewan for me.
Okay. Now, if you guys could recommend some literature or something to watch or something that the guys at home can get a little bit more information. Now, I know that you guys have your own proprietary education. You guys can recommend that on the list too, but do you guys recommend can you guys recommend any resources to the people at home that are more interested in the space or more interested in just learning philosophies related to trading in general?
I think there's a fantastic book. It's called The Laws of Trading by Augustin LeBron. It's a must read. That book, it really taught me a lot. Basically, that goes over, you know, the methodologies of trading, understanding your edge, understanding, you know, the market as a competition, and you know who's on the other side of your trade. You know, because if you don't know who's on the other side of your trade and you don't know whose lunch you're eating, you might just bite into a rock, right, and get smoked. So there's that resource, and I would also say another great resource is any books by Ewan Sinclair for the option space, or Sheldon Natenberg as well.
Yeah.
Okay, great.
I'd agree.
That same list? Nothing to
yeah,
add?
and you know what, for someone who, you know, maybe it's not about the option space, but they, you know, maybe they want to look at building out their, you know, equity book a little better, looking for a couple ideas and something that's a little bit lighter reading, I would recommend The Little Book That Beats the Market by Joel Greenblatt. You know, for someone who maybe has a more passive side to their book that they want to just, you know, generate a little bit of alpha on, it's a great place to look. It's a great book to read.
Now, something that's customary here on the Chart Addicts podcast is we're going to do a spitfire round here at the end. These are going to be quick questions, and it's just going to be a little bit of fun. Just give us give us your top 3 tips for new traders. So somebody who's looking to get into this, they're not really at the point where they've had enough information yet. What would the top 3 tips be for you guys?
I would say first, understand your edge. Do you got one on your mind?
Know whose lunch you're eating.
Yeah. And I would say, you know, this is a really good question, Roy. It's a really good question.
Something that's on the top of your mind that you wish you would have known when you first started out.
Yeah, I would actually say, don't take everything at face value, right? It's easy to get fooled in this game, especially with all the, you know, the crazy amount of content that's out there. Start learning from people who are 100% verified. So for example, Aaron Brown, right? If you look at what Aaron Brown does, he is, you know,
he was risk manager at AQR.
Yeah, you cannot say he's a phony, right? And once you start from there, you know, you can really train your mind to see, okay, who's legit and who's not.
Okay, that's great. Now, do you guys have a recommended, or do you guys have a platform that you recommend, or do you guys have a platform that you like to use
For brokerages or
for
what?
brokerages?
Well, so it's tricky, right? So we have two recommendations. We have a recommendation for people that are in the United States, and then a recommendation for the rest of the world.
Okay.
And what it comes down to is really a couple different things. I don't really care about how user friendly the platform is or anything like that. It comes down to commissions and fills.
Okay.
All right. So for United States, we recommend Thinkorswim or Interactive Brokers, and for everyone outside of the United States, we recommend Interactive Brokers. Right.
Okay.
In Canada, they by far provide the best commissions. You know, like you're in the US, right?
Yeah.
So you probably don't know this. Like if you were just banking with, if you're using Thinkorswim in Canada, you're paying $5 in and out on top of your contract fees.
Wow. So IBKR is your recommended for international, and then you have Thinkorswim and IBKR for domestic too?
Yeah.
Okay. Awesome. This is the last one I'm going to ask. This one's usually my favorite question. What are some recent lessons that you guys have learned from the markets? Because I think it's important for everyone at home to realize that if you're if you're hoping to be in this game for the long term, you're kind of always a student of the market. And so people tend to think that, okay, these guys are on a pedestal. They kind of have it all figured out. Can you guys give some recent lessons that you guys have learned?
Yeah, I got a good one actually.
Don't fight the Fed.
Yeah.
I think we all learned that this year.
I got a good one that happened to me in May, June. I thought I had a strategy that I knew extremely well. And I ended up losing $100,000 in a 3-week period because I didn't understand it.
Wow.
Right? So, don't ever get too confident and too cozy with your strategy, right? There's always that hidden tail risk that you might not have seen in your historical tests or in historical data, right? There is, the future is not always like the past. Okay. So, be very, very skeptical about your strategy, even if it's working for you extremely well.
Okay. I think that is extremely sound advice. So, and I appreciate you sharing that tidbit too. Do you guys have anything else to add?
I'm talking about the overnight.
Yeah, sure.
So, okay. When you look at a strategy, right? And let's say 99% of the time it works, 1% of the time you blow up.
Okay.
Right? Always remember that 1% of the time happens. In fact, it happens 1% of the time. All right. Like it actually will happen. One day it will happen.
For sure.
Right. So you want to make sure that even if you have long-term positive expected value, if your drawdown is so great that it crushes your account, you may not live long enough to see that positive expected value. Right. So it's kind of a funny story. So when we were really trying to get our Instagram going, we've gone through a couple pivots as a company over the last 12 months. But at one point what we were doing was building out these quantitative strategies and then providing people like an ecosystem of tools they could use to execute on different strategies, like just template strategies that are like proven profitable returns. So we started running one of them on our Instagram, and it was a long equity strategy, and the market crashed right away. It was really like the next day, the market dropped 5%. And I was like, what the hell just happened? And, that's important to understand because, we were like, this thing makes money all the time. It'll be a great demonstration. And we actually still believe we still run that strategy. But for what happened during that time, that 1% where you do actually take that sizable drawdown, it did happen. Right. And it was just like, a nice reminder to me that I need to always be in check of these things when managing my book, because these things do happen. Right. And if I was over leveraged in that situation, if I didn't understand that I was, balls to the wall on that strategy, it could have gone badly. That's why, so it was good that we weren't.
A big proponent of expect the unexpected in the markets, because really anything can happen. And that's why risk management is key. I really appreciate you guys sharing so much value on this call. Ladies and gentlemen, Sean and Jordan from Predicting Alpha are in the house. We appreciate you guys for stopping by the Expert Trader podcast. Everybody, you guys can check them out on Instagram at Predicting Alpha, the website predictingalpha.com, the Professional Options Academy.
Roy, thanks for having us, man. It was awesome, dude. Great to be here.
If you guys enjoyed this podcast, make sure to leave a comment below. And as expected, if you guys have any questions for us, make sure to reach out to us on Instagram at Shark Addicts. This is Shark Addicts signing off. Take it easy. Peace.